Okay. Hello, this is Manesh Patel with EII Capital. Today is March 23rd. Yeah, I have to think about what month it is. Things have been going by fast. Hopefully everyone's being safe at home and you guys are not affected with the virus and everything, and all the family members are safe. I know it's a tough time for everyone. However, you got to look for the positive in the negative. And this is something I've been mentioning to all the people when we've been doing webinars, is that while everyone is quarantined, you should be taking advantage of this to learn and get yourself ready in trading or investing and so forth, okay? And that's one of the reasons why we wanted to start this workshop here today, is to kind of start the education process off for a lot of people. We're going to be holding a lot more webinars throughout the week. And they're going to be last minute webinars because I'm just deciding on what topics to do and so forth. Okay. Today, we're going to talk about investment. When I talk about investment, that means long-term picture, not day trading, not swing trading, and so forth. Okay. So when you're talking about investment, this is more retirement accounts. These are trades you're typically holding 8 months or longer and so forth. Okay. If you look at the market situation right now, we have gone down drastically. There are very hard opportunities right now to find any new day trades, swing trades, and so forth. If you do, it's very hard to trade them with the various vehicles out there. In the US, a lot of people trade things with options. Believe it or not, the spreads on both the calls and puts are really berserk to a point you cannot implement a lot of the option strategies out there. The only one you could possibly implement is a butterfly strategy, but even that gets a little risky. If you're outside the US, you're doing spread betting with CFDs, and even on them, the commissions and everything have been really increased drastically on both the calls, the bullish side and bearish side. So a lot of market makers have gotten to a situation where they do not want you to trade short term in this market at all. So this is an investment market right now. However, we will analyze the charts and we'll talk about, okay, when do we think a possible bottom is going to be? What do we look for and stuff like that? Okay. As I mentioned, please, if you have any questions, please post them in the chat room. We are going to keep this on a chat only, no voice at all, unless we really seem necessary to do so. Okay. So as we go forward, please sit there and post any questions you have in the chat room. I am looking at that, believe it or not, and I could see that and stop and address the questions as we move forward. Okay. Now, I'm going to use today here, this is the E-mini S&P 500 futures. When I gauge the US stock market, I always look at two different products, and we're going to look at them today. The very first one is the E-mini S&P 500 futures. I do not look at the Dow. I really don't look at the NASDAQ or Russell at all. I really look at the S&P 500 futures. Reason why is it contains 500 stocks. It's not equally distributed because it's not weighted or anything like that, but it has a lot more of the stocks across the board, and you could kind of see what overall the market's doing. So that's basically what I use to gauge the market. Institutions also look at the E-mini too. They really don't look at any other product except the E-mini, okay? In conjunction with the E-mini, we're also going to look at the VIX product, the VIX. The VIX has an inverse relationship to the stock market. What do I mean by that? If the VIX goes up, stock market goes down. If the VIX goes down, stock market goes up, okay? And we're going to look at that, and we're going to gauge to see what the volatility is. Ray had one question where it says basically the markets are going down and the VIX is going down. Which one do you believe? Well, you have to kind of look at both of them and look for signals on both of them at the same time. Reason why is one product is not going to dominate the other one, especially in a black swan event that you have right now, okay? So the event we're going through is a black swan event. There's no past patterns that you could sit there and look at that will sit there and tell you exactly what's going to happen right now. A lot of people are thinking, okay, we're going to bottom out right now. And some people are predicting the market's going to go up drastically by the end of the year. Some people are going to say it's a 2-year downturn we're going to face. Some people are telling you 5, and so forth. So there's a lot of predictions out there. However, I don't understand how these predictions are being made. Reason why is that you really have no past events at all as similar to this one, and I'll talk about this in a minute. And the only way you could do predictions or forecasting is if you have a past event that's occurred in the past and you're looking for it to repeat again. So I really don't see how people are doing that. So the only way right now what you could do is look at these charts, find the key levels, see what happens around them, and then go from there. So I'm going to show you exactly what I do, and I've been doing for years and so forth. And it's basically helped me forecast exactly where the market's going on a weekly basis, going into the monthly basis, and then going into the quarterly. Okay. And I'll show you how to handle the black swan event that's occurring right now. Okay. So does everyone see my chart here? The chart here is the E-mini S&P 500 futures. This is in a platform called TradingView, and there's the E-mini S&P 500 futures. Okay, you guys, it is free. You can go to TradingView and sign up. It's free for a delayed data, so you can see the same thing I am with the same product. Okay, now we're going to use a tool. Okay, now I'm very cautious on how to use tools. Reason why is that from the retail perspective, retail traders are always looking for tools, and they think that the tools are this incredible thing that's going to give them all the answers. It's not the case at all. Okay, tools are tools. They sit there and simplify your job and give you a certain viewpoint. You still have to use your brain and extrapolate what's going on. Okay, the best tool I found in the last couple of years is a tool called Ichimoku. You guys have probably known that my expertise has been the Ichimoku cloud for years. We've been talking about the cloud for years. We've been doing tons of webinars and stuff like that. And if you looked on LinkedIn, you could see the journey I had where I went from moving averages to Fibonacci's to Elliott Wave to Ichimoku. And today we basically are doing what you call IMTF, which is basically Ichimoku at a multiple time frame level. And that's the most optimum level that you could get to in a trend-based type of environment. Okay. I think someone unmuted themselves. Okay. Just want to make sure I'm hearing some noise. Okay. And the reason why I use Ichimoku is that it's very simple to understand. Okay. My 11-year-old son trades, and he uses Ichimoku, and it's very simple to a point. He understands exactly what's going on. And that's the key to trading. You want to keep things simple to a point. You don't overthink them and complicate them at all. Okay. The problem with Ichimoku is that in Japanese, it means simplicity at one glance. The problem now is that Ichimoku has become a marketing word, and a lot of people have sat there and taken it and abused it and complicated it drastically. That's telling people that there's hidden secrets in this and that and so forth. And it's not true. You got to take every tool for what it is and use it to its best ability, but you still got to use your brain to extrapolate to see what's going on. And that's exactly what we're going to do today. Okay. So if you look at this chart here, you see this cloud. Okay. Do not worry about the color of this cloud or the thickness of the cloud. These are some things a lot of people on the web talk about. It's irrelevant. Okay. What matters is that you have this cloud here. Okay. This is the bar here. The bar furthest to the right is what we call the current bar. So this represents exactly what's been going on this month. Our time frame is 1 month. That means each one of these bars represents 1 month of data. So this bar here is March's worth of data. This bar here is basically February, and that's January. So you could see in January, this bar was not big. You started seeing February, the market's starting to go down. And then basically last month, or this month, I keep on thinking of this last month, but this month, you can see that this bar is huge, okay? Now, how does everything work? You find the current bar, which is right there. You find the closing price. If this is the red bar, the closing price is the bottom of the rectangle. If this was a green bar, the closing price is the top of the rectangle right there, okay? So you find the closing price here, and then all you do is keep it simple. If the price is below this cloud, that means your sentiment is bearish. If the closing price was in the cloud or touching any part of that cloud, it basically means we're consolidating. If this price was above the cloud, we're basically bullish. Does anyone have any questions in regards to that simplicity? Again, if the current price is above the cloud, we're bullish. If we're in the cloud, we're consolidating. If we're below the cloud, we're bearish. Does anyone have any questions in regards to that? Okay. Now, that's the sediment. Okay. Now, what I'm going to do is I'm going to scroll back in time, and I want to show you what history has done with this cloud. Okay. And we're going to scroll back. We're going to scroll back. We're going to scroll back. Okay. And let's see how far. You guys know when the internet bubble busted, basically this was the downturn here. Okay. When the internet bubble bottomed out, it was basically in 2003. Then it started to come up. The very first time that price got above the cloud and closed above the cloud was right here in December 1st, 2004. Okay. This went above the cloud. The sentiment long-term changed to being bullish. Okay. At that point, this market had a long-term view to go bullish, and you could see it did sit there and start to go bullish, and it went all the way up close to 1600 here. Okay. This green line is what we call the container of the trend. So when a trend does start, you want to make sure that it maintains this green line and stays above it. If it does, it basically means you're in a trending environment. And you could see as soon as we sit there and went bullish here, we were above this green line. We stayed above the green line, stayed above the green line, and here we went below the green line. That tells you the trend was over. We're still bullish, but the trend was over. Okay. And the trend will not resume unless we're back above the green line. Does everyone understand that? Yes? Okay. So basically, if price is above the cloud, you're bullish sentiment. In order to start a trend, you have to maintain staying above the green line for being bullish. Okay. So we were bullish here. We closed below here. The trend ended when the price closed below the green line, and the trend never started to gain because we never got above the green line here at all. Everyone okay with that? Okay. Now, the problem was the trend here price never got above the green line, so this bullish trend never started again. And then what did it do? It closed inside the cloud. This is basically when the market started or in a consolidation state long term. This is not good at all. If you start getting price in this cloud, you got a high probability to break through it and then go down and start a trend. That is not good at all. Reason why is if price gets below this cloud and closes at the end of the month below the cloud, the sentiment for the long-term picture is bearish. So you probably hear on TV, everyone saying that this is a bearish market, this is a bearish market, this is a bearish market. Well, that will not be dictated until the end of the month. So a lot of people are jumping to conclusions drastically right now, and they really shouldn't. You really need to see where things end at the end of the month at the close of the bar to see exactly where we're at. If we close below the cloud, then the long-term view is finally bearish, okay? However, that has not happened, and I'm going to show you that in just a moment, okay? So here we closed below the cloud here. This was October 2008. We went down, 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 down here. This is bearish, and it's trending as long as we maintain this green line here. Here in February 1st, 2010, we closed above the green line. That told us that the bearish trend was over, okay? And if you look here, you had one bar here that closed below the green line here that said that the bearish trend can resume, but it never followed through at all. The next month, We went back up, and basically we were in no man's territory where this is bearish, but it's not trending and it's not bullish. So between here and here, you're going for a pullback. Here, which was December of 2010, the markets went bullish, and at that point, they stayed above the green line until this bar here, okay? Even though we closed below the green line here, we still maintained being above the cloud. So if you look here, we were above the cloud back in December 10, and we have been above that cloud since that point. That means we have not been below that cloud or in that cloud at all since here, which is basically back in 2010, okay? So we are in dangerous territory right now. Don't let anyone tell you that otherwise, okay? However, the month is not over, okay? Notice also one thing. Every time we've gone up, we sat there and maintained the closing price of this green line. Within a month, we sometimes come all the way down where it looks like we're going to be below the green line, but we always close above the green line here. Even the very last time here, which was basically December of 2018, if you remember, a lot of people were talking about the markets are going to go down drastically because at one point price was here, and at that point everyone thought we were going for a major correction and so forth. But notice one thing, it closed back above the green line, green line, green line. So since 2010, we have not really closed below the green line, and we haven't really closed below the cloud either, okay? Last month, we touched the green line and bounced, okay? That was good. However, this month, we broke the green line, and now we are below the cloud. However, this bar is not closed, okay? So don't let this fool you. You still have until next Tuesday, I believe, for this markets to go up. As long as we maintain not closing below this cloud, this market is not bearish long term. Everyone understand that? Yes? Do not listen to the people on the news. Just be careful and understand that. Also, if we close barely below this cloud at the end of this month, it still needs to confirm it by next month. So if next month, if we close below the cloud here, next month, it has to stay below the cloud. And if it does, that confirms we are now in a bearish market. So it doesn't take one bar to sit there and confirm that we're in a bearish market. It takes two. One to change the sentiment and one to confirm. Does everyone understand that? Yes? So please don't go jumping to conclusions or panic based on what people tell you. Yes, we've gone down drastically. We've done something that we have not done since 2010, okay? However, you can't sit there and panic and look at the things that have happened in the past, because this is a black swan event where never have you seen a scenario where in 1 month you have the possibility of breaking the green line and the cloud at the same bar. So this is a black swan event. The key thing is to be patient, understand the charts, and look at the things that you know and wait patiently, okay? So right now, this market looks ugly. Would everyone agree? Yes? I'm going to show you how to find bullish opportunities for investment in this market in a minute. So even though this market looks ugly, believe it or not, there are opportunities out there. And I'll show you easily how you can find them, okay? So, and remember, this cloud is do or die situation, okay? So this is a perfect time to sit there and put on some investment opportunities, especially if it holds this cloud this month and then even next month, okay? And believe it or not, I understand this month we've gone through a black swan event, okay? However, believe it or not, it typically happens. February and March, you typically do not have a bullish scenario. You typically have, if some type of black swan event occurs, it typically starts in February or it typically starts in October. That is what history has shown us. History has also shown us that April is a good bullish month, Okay? So don't sit there and panic. Sit there and keep on being patient and look for the opportunities. Follow your trading plan, and your trading plan will tell you when there's an opportunity or not. Is everyone clear with that? Yep. In our chat room that we have in our monthly subscription, we've been sitting there talking to all of our students, and none of our students have lost money in the markets at all this year. So even with this Black Swan event, they have not. Since January in our weekly webinars, I've been talking about be ready for Black Swan, be ready for Black Swan, be ready for Black Swan. We've been prepping people for this to happen. And that's something you always have to make sure is that your trading plan encompasses what happens when a Black Swan event occurs. You need to be prepared for it. So this event has occurred. If you did not be prepared and you did take a hit, don't worry. You could always regain that money. The key is to learn from what has happened and make sure it does not happen in the future again. Everyone understand that? If you look at my history, you'll know that I lost everything in the internet bubble bust. Okay? I mean, I lost everything and got into a margin call. However, I learned from that event to a point, it sat there and set me up to a point I do not go through that again. It was the best experience I ever got, and it basically shows me how to sit there and maneuver through these Black Swan events now and not panic. And that's the thing each one of you guys have to do, okay? So this is the E-mini S&P 500 futures. We are flirting with the bottom of the cloud right now, okay? Now, I'm going to scroll back. This may be hard for you guys to see, but in our indicator, we have these black crosses. So one of the things that we have that no one really has is these black crosses here. And what they do is they represent multiple time frame analysis. And this is something no other vendor can do. They can't really sit there and tell you what the multiple time frame support resistances are in the past. A lot of people could do it in the current bar or maybe a couple of bars back, but no one really could sit there and go back years and find the multiple time frame levels. These crosses actually look at 1 minute time frame all the way to 1 month and find at what price every time frame is looking at. And basically, if they find it's the same level everyone was looking at, it basically prints a black cross. So we do not need to do any calculations at all. We just need to look at these black crosses here, okay? And if you look here, there's a black cross right there, which is right there. We're a little lower. And then, whoops, you have another one, which is right there. These are the two levels you have for the market to bottom out right now, okay? So yes, we are below the cloud. We could sit there and go to these levels. Now this right here was very close here to a point the spreads could have made a difference on the futures there, okay? But typically it's not. But you're looking at here and you could see that this is critical levels. These levels are very critical. If it does not hold on a monthly basis at these levels, then we're going to be in trouble. I'll tell you that now, okay? But we have a high probability by the end of this month, we're going to bottom out one of these two levels. And believe it or not, we still have a high probability where this closing price will sit there and get to that black line and close above it. So we are not far away from the bottom of this cloud, okay? So everyone panicking, I don't understand. You have to understand a black swan event has occurred. The virus is still out there. People are quarantined. There is fear. So this thing is not going to clear out as fast as everyone thinks it is within a couple of days, no matter what the Fed, no matter what the president does and stuff like that. This will take some time to clear out, okay? So these are the levels that I'm looking at right now, and these are the ones that we have published on the internet too, okay? So you guys could see these levels here, and they're basically at 21.62 and 21.25.75 are basically the levels, and you could see those values right there, okay? Now, let's go to the VIX. We're going to type in VIX. And I typically like to go to the weekly on this one. We'll go to the monthly in a minute, but I kind of want to show you why. I'm going to zoom out a little, just waiting for the indicator to load and show me everything I need. Now, here is the problem. This is the weekly index for the E-minis, okay? Right here, which is February 24th, what happened? We closed above here, okay? A lot of people thought this was fake and didn't take it seriously. So a lot of people started buying in the market, and then basically when the markets kept on going down, they panicked, and you start seeing this upward movement here where people are trying to close out their positions. Does everyone see that? If you look back in history, here we closed above the cloud here but never followed through. We really haven't sat there and closed above that cloud completely until the last time we were above that cloud completely was back here in this mess in 2016. Everyone see that? There's an event here which looks very, very similar to the bar that we have today, which is right there. Everyone see that? It's this one, but it's not a spike. And the next week, it basically did this junk here. So if you look at it here, if you sit there, and another tool you could use is the VIX. If you ever see VIX on a weekly basis close above the cloud, that's not good for the markets at all. And it tells you it has a potential to drastically go down. So if you look here, at the end of basically here on January, right here, we gapped up here basically at January 24th. And the problem here is that people thought this was fake, but the problem was we closed so far away from the cloud that this volatility was gonna stay here. If you look here, we closed very close to the cloud to a point, all I had to do is move down a little to bring the volatility back in check. Remember, if the VIX goes up, the markets go down. So this was a clear sign here. The volatility was here, and since we closed far away from the cloud, it was going to be here for a while. And you could see here that how we've been doing for the whole month. Now, this week so far, the volatility's gone down. Has it gone down much? No. So if the markets are basically have gone down today and the volatility goes down, does that mean we reached the bottom? No. First things first, this is a bullish trend on the weekly time frame. It's got to break this green line here. The moment we close below the green line here, now we have a possibility that volatility can sit there and be controlled, and it's going to sit there and have a probability to go lower. The key thing is it's got to sit there and get in this cloud and get below it to get back into a normal situation. And if you look, we are so far above the cloud that's telling you that volatility is here to remain for a little while. Everyone clear with that? Yes? If you want, I'll show you the monthly time frame. And you can see here on the monthly what's going on. So if you look here on a monthly, we've never closed above the cloud at all until last month. We did that for the first time. And the last time we closed above that cloud was back here in 2010. Everyone understand that? Yes? And if you look here, this is very, very similar to what happened in 2008. Closed above the cloud here. We followed through, and then volatility finally broke the green line here, and then we slowly made our move down here. And that's what we're looking for. We need the price to close below the green line in order for us to sit there and make that journey to the cloud and volatility die down. Everyone understand what we're looking for? So 2 things I'm looking for on a monthly basis. 1, E-mini maintaining that cloud on a monthly time frame. And 2, I want to sit there and see this green line here, the VIX go below the green line on the monthly time frame. Is everyone clear with that? Yeah? Now, what's a good way to find out when the markets possibly have reached the bottom? That's a magical question everyone asks. Let's go and look at the E-mini, and we're going to go to a 4-hour. Now, why do you think I picked the 4-hour time frame? I didn't pick it out of randomness, believe it or not. The 4-hour, believe it or not, is the bridge between the swing traders and long-term traders. So in order for the long-term time frames to move and start to go bullish, you need the 4-hour to make its move and to start looking good, okay? So the 4-hour has to sit there and start to go bullish. And if it doesn't, you have no possibility of being in a bullish environment at all. So a 4-hour gives you a very, very good clue on what's going on, okay? If you look here on the 4-hour, we closed below the cloud here on the 4-hour for the first time after a long time on January 21st on 10. Everyone see that, okay? When we close below the cloud here, price maintained this green line here to basically be in a bearish trend. The bearish trend ended here when we closed above the green line. Everyone see that? Okay. Now, we closed below the green line. We stayed above the green line. We had a high probability to get to the cloud. Okay. We had a couple of fluke bars here where we closed below it here, where it looked like we're going to resume starting this bearish trend, and then it reversed on us again here, and we got to the cloud. Now, here's the problem. When we got to the cloud, we never closed inside of it. We skated along the bottom of the cloud, and that was a good sign that this was going to go bearish again. This did not even go into the cloud at all. This shows you that the bears were very strong. By doing this thing where it's skirting along the bottom of this cloud here, you had a high probability to come to retest that low and break it. And that's exactly what happened. The moment we closed below the green line here, we took off, went to retest that pivot there, and broke it and started another bearish trend. Everyone see that? So as a day trader, as a swing trader, you could look at this to basically time what type of trade you're looking for in the market, whether it be bearish, bullish, or what, okay? Over here, on this bar right here, on March 13 at 2 o'clock Eastern Standard Time, we closed above the green line. That tells us the bearish trend could possibly be over. We needed to confirm. Next bar closed below. It was not confirmed at all. This was a fluke, and basically telling us that this still now has a high probability to go down, and that's exactly what happened. It had a chance here to sit there and end the second bearish trend. It didn't do it. The moment it closed on that second bar here, you knew you had a high probability to come here, test it, and break it again. Then you came down again. You closed above the green line here on March 20th. Okay, now the bearish trend is over. You needed to confirm. Second bar right here, close below the green line. That means the bearish trend is still intact. Also, since on the next bar closed below it, we have a high probability to retest that low and break it. And that's exactly what happened here. We went and retested that low and we broke it and came down here. Everyone see that? This morning, the markets were up. And when the markets opened, and we were right around here, it looked like this market was going to take off. We were above the green line for a little while. And I was telling everyone, don't jump to conclusions that this market's bullish. Don't jump to conclusions. You need the bar to close above it and the second bar to follow through. Look what happened. We went above it, and then we went down, and then we sat there and retested that low. Does everyone see that? So do not let everything fool you. Be patient. It will be ugly when the markets bottom out. It's not going to be a smooth going up drastically. You'll see some typical consolidation patterns here at the bottom. And the reason why is that you need massive number of people to buy. You need institutions to buy. You need all the retail people to start coming in and start buying. And people are not confident right now to buy. So you need to sit there and be patient and wait patiently for these opportunities. Is everyone good with that? Okay. Now, let's go and show you how to find these opportunities. So, everything we've been doing has been on a monthly basis. Would everyone agree? We're going to go to our website, IMTF Trade. You can only do this on level 3 subscription, which is a paid subscription here. Okay. On the free version, all that, you can look for setups and other things. But what we're looking to do is find trends, bullish trends on the monthly time frame that are still intact. Is everyone clear with that? Yes? So I'm going to go to products. I'm going to go to scanner. And what I'm going to do is I'm going to reset everything. Don't worry about all these fields and all these menu options, okay? We're keeping it simple. I'm going to go to the General tab, and I'm just going to choose the S&P 500. You could choose various different instruments around the world, so you could choose NASDAQ, S&P, Dow, all of them, currencies and futures, and do the same thing. Right now, for example purposes, I'm going to choose the S&P 500, and I'm going to show you the trades that I looked at and took, okay? So now I'm going to come to the monthly time frame. And I'm going to come up with a strategy. And what I'm looking for in the strategy is either strategy number 5 or number 6. Do not worry about what they mean. A number 5 is basically a new bullish strategy that had occurred, and number 6 was a trend continuation. So either way, I'm going to filter through both of them, and there only shows you target here. Everyone see that? Yes? So now I'm going to take target, and I'm going to go to the monthly time frame. And I'm going to come here. First thing you got to do is you got to, with your natural eye, ask yourself, does this look like it's upwards? Trending upwards? Yes or no? Yes. Okay. That's good. That's exactly what you're looking for. This, no matter what his markets have done, this still looks like it's bullish. Okay. That's what we're looking for. This is a trend. Notice what I showed you before. The moment it closes above the cloud, this green line is a container of the trend. This has sat there and maintained this trend here all the way through. Everyone understand that? Yes? Now, you know that this green line here, it maintains the trend. Agreed? So, what you could do is, if you're an investor, this is your do or die for the trend. So when price hits this green line here, you could sit there and look to buy for investment purposes. Everyone understand that? So what I'm looking for is a trend, a bullish trend, but to be specific, on a monthly time frame, and then it pulls back to the green line and I basically buy. Okay? If you're also looking for other things, you can make sure that the instruments you buy are dividends too. So this is paying you out a dividend. It also hedges you for any more downside it could go. Is everyone okay with that? Yes? No? Okay. Now, let me adjust something real fast. Just bear with me. Now, you know exactly where to buy, which is the green line. Agreed? For investment purposes, people typically stay in, but you can sit there and have a stop. And if you look here in our indicator, it tells you where the stop is, which is what? The green dots. Everyone see that? Yes? So if you look at this trade here from investment purpose, okay, I'm going to put a risk to reward tool out here. And just like trading, we're going to take the same things that we do in the trading world and apply it to investment. So I'm going to enter here, right there. My stop is going to be the green line right there. And I'm going to target that pivot high, which is up here on a long-term basis. And if you look at this opportunity, this is a 5-to-1 reward risk ratio. How does that sound? Sound good? If you're doing options, you got to do this with leaps. If you're doing the straight stocks, then you're buying the stocks, you're going to get the dividend and everything, okay? If they keep the dividends, let's talk about that. That's another subject. Some companies might strip off their dividend or lower them, okay? So right now, this looks like it's going to give it in. This is a good opportunity here, completely here, okay? So you could sit there and buy here. Another way you could treat this is that when it hits the green line, you could wait for it to go down below the green line, and then when it comes back up to the green line, you could enter. So if you do it that way, you're not going to go for this drawdown. Does that make sense to everyone? Okay, so that's another method. Either you buy straight right away when it gets to the green line, or what you do is as soon as it hits the green line, remember, this is a monthly chart. Wait for it to go below the green line, do its little funky thing that it wants to do, go for its drawdown, and then as soon as it comes back and hits the green line again, going upwards, you basically get it into that trade, and now you're patiently waiting. Everyone okay with that? Okay, now this on the scanner was a new trend. That's the number 5. Now we're going to look for trend continuations that had occurred on the monthly time frame. And look at this. We got a little more opportunities here. Oh, there's 2 pages. So let's go this and do this. Anyone heard of Walmart? Walmart's on that list. So let's go look at Walmart. And by the way, these are trades I'm in. Okay. Now, again, we're looking at this chart. First thing we want to do is validate with our eyes. Does this look like it's bullish going up? Yes. Okay. Now what we're looking for it to do is touch the green line. It touched the green line right there. Boom. So you could enter this trade here, or you could wait till the thing, it goes down and then comes back up. Is everyone okay with that? Yes? And if you look here, do you think I got a 3-to-1 reward risk ratio already? In a bearish market last week, while everything was going down, Walmart went up. This is a bullish trade in a bearish market. It was a great trade. And here's the thing, it was investment and it got to the levels. So if you look here, my stop was here and my pivot high was where? Whoops, right here. How's that look? Looks good? You had a 3-to-1 reward risk ratio within a week on an investment play. How's that look? Looks good, doesn't it? Imagine if the markets bottom and start going up. Where do you think Walmart would be? Walmart looks like it's got a potential to go up even more if the markets turn around. Would you guys agree? Yes? Okay. Let's look at another one. VRTX. Now, again, you look for a trend. Does this look like it's trending? Yes? Anyone heard of VRTX? I never heard of it, believe it or not. So look what happened. Went up, came, green line here. Everyone see it? Buy and look at your opportunity. And all I'm doing is I'm just taking this list of the scanner and going down. Let's look at TMO. Now, does it mean that these opportunities are gone? Some are. You could take that list and you could sit there and put an alert and see if it comes back. These are long-term opportunities where it can sit there and come back to those opportunities, can it? Yes? Now, here's one here. Now look at this one. This one's interesting. Everyone see this one? So it hit the green line. If I entered, I'm out of the trade. Everyone see it? Yes? If I sat there and waited till it went down and then came back up, am I in this trade? Yes, no, no. Okay. However, this looks good, doesn't it? Next is CLX. Oh, this is a darling one. CNBC talks about this so much. It's crazy. Now, looking at this, does this look like it's a trend and a pullback? Let me ask you this. Does this look like a trend? Right there. No. This is the thing. You got to make sure it's a trend. Remember, we're doing pullbacks to the green line. A pullback is basically profit taking. How can this be profit taking if you're in a consolidation pattern? If you're in a consolidation pattern, this is not profit taking at all. This is junk. So move on. CNBC talks about it. It's not even worth our time at all. Okay? PGR. Now, look at this one here. You have a trend up, pulled back, retest the high, and now we're pulling back. Would this be one that you buy straight off the green line? No. This is one that you sit there, you wait till it goes down, and then if it decides it wants to come up, then maybe if you're aggressive, you sit there and look at buying this. Everyone see that? It does have a dividend too. I don't know what they do. Okay? And I honestly don't care what they do. To me, news is irrelevant. Okay? Microsoft. Anyone heard of Microsoft? Vishal is saying no. You definitely have. You're Indian. Okay. Does this look like a trend? Yes. Now, are we at the green line? Yes. Are we below it? Yes. So you could enter now, or you could wait till it comes back to that line and then what? Enter. And if you look at the reward risk for this trade, for investment purposes, and by the way, it does pay a dividend too. And let's just say you come to this little cross right there, that multiple time frame cross. That's a 400% return just to get back there. Does that sound good to you guys? Yes? Let me ask you something. Have you ever seen anyone on investment purpose that's long-term use stops and targets? No? Well, let me tell you a little secret. That's why your retirement accounts are 20 or 30% down. Am I making my point clear? You have to sit there, even from a trader perspective, treat this as a trade. You cannot sit there and enter something without a point where you get out. The problem with a lot of investments a lot of people take is that they sit there and they get into them and they don't know where to get out. And then when it starts free falling, it's too late to think about it. Everyone understand that? Yes? You can't do that. You got to sit there and cut your losses short on investment. If it's not going to work, get out. Your other trades will sit there and take care of that losing trade. And believe it or not, you're not going to lose this much, because if you're in this trade for a while, you're collecting dividends. Notice on the Walmart, I'm collecting dividends at the same time. Everyone understand that? Yes? Does anyone have any questions? Did you guys enjoy it? Okay. So, for anyone new that has not ever seen us, you could email us here at info@eiicapital.com, okay? We'll look at some things in a minute. Freddie, if you email us, if you're looking at joining our monthly subscription is basically $35 a month. You get the indicator, you get the weekly webinars that we're doing live, okay, where we basically go for the markets and then we go through, find some trades, and then we also have a lesson plan. Okay, so those are 3 things that we cover every week in our weekly webinars. And then we also have a chat room on the WhatsApp, where everyone is trading with the system and so forth. So if you're interested in it, it's $35. It's not expensive at all. Pretty much pays for itself within one trade. You could email us at info@eiicapital.com. And I'll put it again. Okay, now, before we go, I want to address something. I'm in Dallas, Texas, and one of the biggest things a lot of people hear is, should we buy oil companies? They look so good. There's no way they're going to go bankrupt. The first one is Exxon. Now, let's talk about this. Yes, we'll talk about airlines too, don't worry. Now, how does this look compared to Walmart? Bad. It does, doesn't it? Okay. Now, let me ask you something. Let's walk away from the charts and let's look at an analogy. I'm just going to think of this on top of my head. Let's say you bought an iPhone and you got it really, really cheap. Let's say you got it for $300. When you bought it, you thought it was a great bargain. Would you guys agree? What if all the prices of all the iPhones for that model had dropped to $300? At that point, was it a bargain? No. Now, understand that terminology and that analogy and apply it in the trading world. This is on a free fall. This looks like a bargain. But if no one buys it, this becomes the normal, not a bargain. Everyone understand that? Remember, each one of us are small in this big, big investment world. We need institutions to come and buy. Everyone understand that? Yes? And if you think about this, the green line is here. In order for this to even start to think of going bullish, I gotta break the green line. That means I need this thing to move $20 upwards just to get to the boundary condition where maybe it could break it and go up. And in that journey for the $20, I got tons of resistances and ceilings that are gonna be my obstacles in going up. You guys understand that? And also understand one thing, institutions are not buying this. If you look at this concept here on the monthly time frame, the moment price gets below this cloud here, or even price gets in the cloud, institutions are out. They're exiting. You guys understand that? Yes? If institutions are not buying here, how many retail people do you need to make this, to buy for this thing to go up? Do you really want to take that risk? Or do you want to make easy money? This could sit there and take 5 years. My Walmart trade took 1 week. Remember, the more time it takes, the higher the probability for something to happen to knock it back down. The faster you get your money, the less probability that something can happen to it. You guys understand that? 2 things that we specialize in compared to everyone else. 2 words, forecast and timing. Forecast is key because you want to predict things before they happen. This is why when the markets were going down in this black swan event, and it could be not just the markets going down, even before the black swan event, you could have had a scenario where a stock company drastically gaps up or gaps down. You could play on gap scenarios too. But if something happens as a black swan event, the very first thing you should do is go to the monthly time frame, as we did. We look for a trend, and we look for forecasting for it to get to the green line. That's what forecasting is, being prepared, having your order out there, and knowing what to do before the price even gets there. You guys understand that? And second is timing. Timing is critical. Why? You don't want the probability to get stopped out. If you got the wrong timing, you could get stopped out, then it goes your way. How many times have you been in a trade, you're correct, but you made no money? In fact, you lost because you got stopped out, then it went in your direction. Many times, little. It's not even fun, is it? That's when people start praying because they go back in, double their position, and a revenge trade. Have you heard of it? I know I used to do it. I think every person has gone for that scenario. This is not an opportunity in my eyes. You guys could sit there and take the risk on it because yes, oil has tanked and everything, but this is not an opportunity for me at all. Let's quickly look at the airlines. This is Delta. Delta is probably the strongest one worldwide, okay? How's it look? Looks ugly, doesn't it? Yes? Let me go to a quarterly picture. Let's go zoom out some more. If you look, Delta's gone for bankruptcies. And I know because I used to live in Atlanta, which is the home of Delta, okay? When it came out of bankruptcy, it started here at 22. Look where we're at. 22. On a quarterly basis, we're at the bottom of the cloud. Do you guys see that? There's no way this bullish trend will resume unless it gets what? Above the green line. So, do you think I'm looking at airlines at all? Here, some people say Southwest. How does Southwest look? Look, I understand the word bailout. However, bailout doesn't mean they're going to help you. So look here. This is at least far away from the cloud, isn't it? And it's not much journey to the green line, is it? If any airline has a potential in the future to go up and start a trend, it's going to be this one. You guys see it? Because it's still far away from the bottom, from the cloud. This is the only airline that's still far away from the cloud completely, okay? Now, since I moved to Dallas and away from Delta Airlines, let's look at American Airlines. How does this chart look? Does it look pretty? How many people want to buy? I mean, if you think about it here, it's a bargain. Look at it. When it first came out, it was right here. I could get below the IPO price here. It's a bargain. You guys want to do it? Think of it this way. If you had bought here, okay? If you had bought here, just to get back to break even, you sat there and waited 24 quarters. There's 4 quarters to a year, right? That means you waited what? 6 years just to break even. To what? Break even. And then to come up to here, guess what? You waited another year or 2 years. This is called timing. You are correct. If you sat there and held this thing for 8 years, you made money. Everyone understand what I'm getting at? Yes? Okay. I'm done. That's all I have. Any questions? My last word of comments. Do not panic in this market environment. Stay positive and look at the opportunities. The people that panic will never find the bottom opportunities at all and won't make money long term. Be patient and look for the opportunities. As you saw, I showed you exactly how to find them, didn't I? Yes? There's your list. Not much, but there's your list. All it takes is one trade, doesn't it?